Okay, everybody, hello. I welcome you to this webinar today on the very important and very informative topic, which is gonna be the topic of today's discussion, and that is about the Forex lessons, its Forex advantages. So I just want to check if everything is working fine. I will check if the audio especially is okay. I think everything is working fine. So guys, if you see any problem, you can send in the chat box, and I will also encourage you everybody to please go ahead and join the Telegram channel, because we keep sharing lots of great stuff on our Telegram channel. So if you think you want to get some good education free of cost, then go ahead and join the Telegram channel, and I will request the admin to please post the link to Telegram channel in the chat box. Admin, can you please post the link for Telegram channel over here, because people will be joining the Telegram channel. And guys, please go ahead and join the Telegram channel, because you will be getting lots of free education in the Telegram channel. Okay, so I am going to take a look at the chat box right now. You guys have been sending a lot of messages. We have Vikash Gupta ji. He's saying waiting for your workshop, big fan sir. Thank you so much, Vikash ji. Thank you really much. There is somebody, high stakes trading, great, Saeed sir. Okay, thank you so much, high stakes ji. Trader Wild ji is there. Wow, Saeed sir, bake my many questions, please give time. Okay, thank you. And Trader Wild ji, you can always ask me questions. Guys, you can always ask me any questions. I will be responding to your questions in all the webinars and workshops. So you can without any hesitation, you can ask me any questions you have. Khan ji is there, saying assalamu alaikum. Wa alaikum salam, Khan ji. Medi Singh ji is saying not good. Okay, so I think everything is now working fine. Khan is saying, okay, everything is fine. Thank you so much, Khanji. And Manoj Patraji is there. Good evening, Manoj Patraji. Okay, so there is a Telegram channel, and it is, by the way, free to join. Guys, all the people from, especially from India, please go ahead and join the Telegram channel, because we have so many things to post in our Telegram channel. We keep posting these things. So let's go ahead, guys, and take a look at our workshop topic. So what's the topic for today? The topic, as you can see, is about the advantages of Forex, and we will be, of course, discussing so many things which will be useful for you guys. This is gonna be a workshop about the information regarding the Forex trading industry. I think this information will be extremely useful to you guys. So let's get started without wasting our time. So first of all, of course, we have this disclaimer. Any opinion, news, research, etc., prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute any investment advice. And guys, I will also be showing you the okay, so eager to learn from you the Forex advantages, sir. I am ready. Thank you so much, Visham Narzari ji. Sunil ji is saying session Hindi में नहीं है क्या? Sunil ji, नहीं, ये हिंदी में नहीं है. It's not in Hindi, Sunil ji. Hi Sunil ji. Medi Singh, tell me how to know trend by indicator positional. Okay, I will be discussing the answer to this question, but first I will be going through the workshop, which is today's topic. And guys, I will also be sharing with you guys over here the promo code. Please go ahead and make a deposit if you want, but this promo code will be working only once, so you can go ahead and so guys, you can go ahead and make a deposit if you want, and the deposit will be working only once, because it will give you 100% of the deposits that you make. So that means if you want to deposit $100, then you will get the full $100 from the company, which will make your total deposit 200. And I have already shared the promo code, as you know, and I will be sharing it at the end of the lesson as well. Remember, this workshop is gonna be the 4-part series, and you can get a certificate of attendance if you attend every single lesson in this course, and also get yourself registered for all the webinars. And you will also get Trader's Guidebook in PDF, the participants who will receive this guide in a follow-up email once the webinar is over. So let's go ahead and talk a little bit about me. I have been, okay, Sunil Parajpat saying hello. Okay, hello Sunil Parajpat ji. So this is a brief introduction about me. I have been a professional Forex trader for a pretty long time now, and I have spent 10,000 plus hours of screen time. I have also passed, as you see, CFL level 2 and all these things, and I have got master's degree in trading psychology. Currently I am doing a PhD in technical analysis of the Forex markets. So let's go ahead and get started with our contents. As you know, these are the topics. We will be discussing the advantages of the Forex market first, and then we will go ahead for trading sessions. Of course, the timings and everything we will be discussing about the trading sessions. When to trade Forex, that's a very important question. There are so many students which always ask me this question: what is the suitable time to make your trades? So of course we will be discussing all of that. Forex terminology, there are so many terms, there are so many words which you might not know, so I will be discussing them in detail. We will discuss a little bit about the leverage also, and we will also show you the take profit and stop loss orders. Okay, I'm so sorry about that because the light, there was a little bit of problem with the light. I hope everything is working fine now, and you can see that we have this topic with us today. So first of all, we are going to discuss the advantages of the Forex market. Now, why do you think that Forex market, why do we advocate that you should be trading in the Forex market? Because there are a lot of advantages to the Forex market. So what are the advantages? Well, we will discuss some of them. Guys, I hope everything is working fine now. I think everything is fine. Okay, so the Forex market holds a lot of advantages for the beginners as well as for the very experienced traders. Okay, so first of all, there is a high liquidity. So what's the meaning of high liquidity? Well, we will discuss everything about that in today's workshop. So what's the meaning of high liquidity? Well, in a short and a brief way, if I were to discuss about the liquidity, it will be something like this. So what is liquidity? Okay, so liquidity is actually something, is the phenomenon in the market where you have many buyers and many sellers. That means that there is almost always somebody in the market which will take the other side of the order. So if you want to make a buy trade, then there is always somebody willing to take the other side of the trade, which is gonna be the sell. Okay, so somebody will always sell you something if you want to buy, and if you want to sell, somebody is always there to buy. So that is the advantage, that is one of the advantages of the Forex market. The time flexibility, that means it's not like stock market, you only have to trade within the given duration of the stock market, but in Forex market you can trade at any time you like. So that is gonna be a huge advantage for you. The other advantage is the volatility. Volatility means the market makes a lot of big up and down moves. And you remember, the most important thing for a Forex trader is the volatility. Volatility means movement in the market. So movement is there in the market. So the market does not stay calm. Remember, if the market was something like this, then there are no trading opportunities because there is no volatility in the market. But if the market moves like this, then there is a lot of volatility. So if the market moves a lot, that means we have a lot of opportunities in the market to make our trades. There are many tradable instruments. So there are many Forex pairs, and then there are so many cross pairs. There are major pairs, then there are indexes, index funds, and then there are so many other things such as metals and all these things, you know. So these all things are also part of the Forex market. That means that is also a big advantage of the Forex market. Now there are also zero or minimal commissions. Now you know that OctaFX does not charge you any commissions. Well, they don't charge you any commissions. That means you can trade without paying anything in the form of commissions to OctaFX. There is a spread, but that's a different story. You are not charged any commission by the OctaFX broker. That means in the Forex market you have this advantage, you have this opportunity to keep on making your trades without paying any commissions to your broker, especially the OctaFX broker. And one more advantage is the leverage. So leverage increases your buying power. Well, we will discuss about leverage in great details, but I just want to give you a brief introduction about the leverage. So what is leverage? So leverage multiplies your trading balance by a big number, such as, so what will be the number? It is the same number which you select as your leverage. So for example, such as 100 it might be 50, it might be 200 or something like that. It might be 500. Remember, OctaFX gives you the leverage of up to 500, which is a big number. Khuram YG is saying Assalamu alaikum, wa alaikum salam. Mehdi Singh ji, I will address this question of yours. Please give me a little bit of time because first I have to finish everything and then I will come to your question. Okay. So yes, Mehdi Singh ji, I will discuss answer to your question. So, but please give me a little bit of time. And then a very important advantage of the Forex market is that you have free practice demo accounts available. For example, you can make a demo account with OctaFX. I think I showed you how to create a demo account last time in the first workshop. If you do not know how to create a demo account, you can always go back and watch the previous webinar which I did on the previous Monday, and I have explained everything in that. So please go ahead and feel free to go ahead and watch that webinar. Now, about the trading sessions. So what are the trading sessions associated with the Forex market? Well, there are 4 main sessions. You can actually say that there are 3 major sessions, but you can also divide them into 4 sessions. And remember, the currencies are traded 5 days a week and 24 hours every single day. Okay, so Khuram YSG is asking about the Fibonacci levels. Khuram YSG, I have given a complete full webinar about Fibonacci retracement. Please go ahead and watch that webinar. That is in LTS workshop. LTS means live trading session. Please go and watch that webinar. I have given everything, every explanation about the Fibonacci. Okay guys, so what about these sessions? So these sessions, you can see the timings for these sessions are different. So for example, Sydney session opens at 10 p.m. and the closing time is gonna be 7 a.m. and Tokyo session starts at 1 a.m. and it will close at 10 p.m. Okay, by the way, the times listed here are GMT plus 1. Okay, so Nandi ji is there. Hello sir, kaise hain? Thank you so much, Nandi ji. I'm great. I'm doing great. Thank you for coming, and I hope you will get some good ideas from our today's session. Khuram Wise ji, thank you. Okay, so London session, which is my favorite session, and today we will also be discussing the London session breakout strategy. That session starts at 8 a.m. Now, of course, that is also the GMT plus 1. So it starts at 8 a.m. and finishes at 5 p.m. Then the New York session, it starts at 2 p.m. and finishes at 11 p.m. So you can always trade any session which you like. Now, when to trade Forex, these are the important ideas. Now, it says that other than the weekends, there are just 2 public holidays when the Forex market is closed. One is the Christmas Day and the other is the New Year's Day. So these are the 2 days on which the market will be completely shut down. It will be closed. There is no trading on the Forex markets. And the opening and closing times are also based on the local business hours. So remember the time schedule which I discussed on the previous slide. That schedule is based on the local time of that region. So for example, 8 a.m. is gonna be the London sessions time, and it is gonna be the 8 a.m. in London. The Forex market opening and closing hours will change in March, April, October and November as countries move to daylight savings. So these things are different according to different daylight saving timings, but you can get a general idea. So you don't have to worry about the details of daylight saving hours because they don't matter much. Furhana Nuruddin is saying hello Furhana Nuruddin, welcome to this webinar. Now, Japan does not observe any daylight savings, so the Japanese market always opens at the same time throughout the year. The whole year, Japanese market opens and closes at the same time. It's important to trade when at least 2 sessions are open because the market tends to be volatile at that time. Remember, traders, the volatility is the most important thing for us as traders because we do not want to trade the non-volatile markets. We always want to trade the markets which are sufficiently volatile so that we can make some good profits. And if you observe on some day that the market is not volatile enough, then please do not trade on that day or at that time. For example, the overnight session, markets are not volatile in the overnight session and there are no opportunities, so please do not trade in the overnight session. Okay, now what about the London session breakout strategy? It is a very important and very well known breakout strategy. So what happens actually, okay, so let me explain the London session breakout strategy. So this is GBP USD. Now I will not discuss on today's market because today is the bank holiday, but I will discuss on yesterday's market. So let's say this is yesterday's market, as you can see, and the London session starts from this time. Okay, not this time, but let's say, yeah, so this is according to Indian time. This is according to Indian time. So the London session starts at 12:30 according to Indian time. 12:30. I'm sorry about that. So 12:30 the London session starts. So can you see that there is a lot of movement in the market? So you can actually come 1 hour before the London session and start trading. So you can come before London session, just 1 hour before the London session, and remember that during the Asian session, which is this region right here, you will see that there is a range, there is not much movement. Now on this day there is movement, but normally the days in the Asian session, they will show you that there is not much movement. So what happens is that just before the London session, the market will break out to the upside or to the downside. So it will be either a breakout or a breakdown. What do you do in these circumstances? Well, it's very easy and very simple. You will go ahead and put your trades in the direction of the market breakout. So you see this is an up move. So what you will do, you will put your trade over here because this is an up move and the market is coming back to test this same level. And then the market makes a spring. And you know very well that we like to buy the springs, so you can just buy over here and you can extend the trend channel, and you can close your trade right over here. So it took you how much? It took you roughly 2 hours to finish your trade, but it is giving you very good profits. So look at this, it is giving you 7.5%. So 7.5%, I think it's a big money, isn't it? So if you just risk 1% of your account, you can make 7.5%. If you risk, let's say 10% of your account on this trade, then you made how much? You made 75% of the account on this single trade. This is the magic of the London session breakout strategy, because in London session, you will take a lot of opportunities to the upside or to the downside. Now, of course, you always have to place a sell stop order or buy stop order. You can place a sell stop or buy stop, and we will practice that. So let's go ahead and place our sell stop or buy stop orders. Okay, and we will discuss that with regards to the London session breakout strategy. So this, you can see, is the OctaFX demo account. What I will do right now is I will put a buy trade, but I will not buy on the market. I will just buy through our buy stop order. So what I will do is, for example, I want to buy over here. Okay, so what I will do is I will look at the price. So how much is the price? It is 1.23501. So you can go to this new order and go to new order, and how many lots you want to buy? Let's say you want to buy 0.5 lots. Okay, and you can always determine your stop loss a little bit later, but what I will do is I will just place the stop buy order for now, and then we will put the stop loss as well as the TP. Okay, so where do I want to buy? I want to buy, let's say, over here, 1.23508. So what I will do is I will, as I showed you over here, go to new order, put it over here, and 0.5 not market execution, pending order, and pending order at what? At this level. Which level? Buy limit? No, buy stop, because the market is going up, so I will make a buy stop. Okay, so buy stop order over here, and what's the price level at the buy stop? So let's say this is the price level, 1.23510, 1.23510. So this is where I want to buy. So I will just place the order. Okay, I am unable to place the order because the market is already moving to that point. So I can select a different point, let's say over here. Okay, over here. So I can change the order a little bit. Let's say where, over here, 1.23565. So 1.23565, 1.23565, and how much you can make this much. So whatever you want to do, you can just, let's say, buy stop over here, and you will just place the order and it will be placed. Okay, let's do it one more time, for example with the limit order, limit buy order. Okay, so Mukul Kumar ji is there. He's saying please like the video. Yes guys, please, what are you doing? Please pause the video right now and go and like the video. Please give me a thumbs up, because that will help us a lot with the algorithms, you know. Okay, thank you so much. Please go and like the video. Thank you so much everybody, and thanks a lot to Mukul Kumar ji. Okay, so I can also make a limit buy. Let's say I want to buy over here now, not here because the market is too far up. So I want the market to come down and then hit my buy order. In that case, I will put a buy limit. So where do I put the buy limit? Just go to this one, new order, and put a buy limit. Let's say not market execution, because it will make you buy or sell right now, which we don't want to do. So let's say pending order, and pending order buy limit. Yes, buy limit at what point? Let's say at this point. So what's the point? It is 1.23469. So 1.23469, just place it, and you have this buy limit. So what's the meaning of this buy limit? The meaning of this buy limit is that when the market comes down to this level, your order will be executed automatically. So you will not have to do anything. Your order will be just executed. Do you want to place the stop loss and TP? Well, of course, yes. So how do we place the stop loss and TP? Just double click on this line, and you will see that there is a stop loss and there is a TP. So what do? We will look at the stop loss level and TP level. So let's say I want to place our stop loss over here. It is 1.23443. So 1.23443, this is where I will put my stop loss. I can just click the modify button, and you have this stop loss over here, and it is showing you that if the stop loss is triggered, then you will lose how much? $13 only. Okay, now let's go to the other time frame, let's say 5-minute or 15-minute time frame, and now I also want to put the TP. So where do we put our TP? We will put our TP, for example, over here. Okay, 1.23574. So just double click on this one, and what was the TP level? It was this one, 1.23578. So 1.23578, and just click modify, and you will have the TP. And you can put your cursor on this. It will show you that if your TP is triggered, then you will make $54. But if your TP gets, if your SL gets hit, then you will lose $13. So this is your risk reward ratio. Okay, so you want to make another, let's say, buy stop order. Well, yes, you can do it. Let's go again to new order and go to where? Not market execution, pending order, and where? This one, buy stop. And buy stop at what level? So you can determine the price level. Let's say this is the price level, 1.23538. So 1.23538, this is where I want to put my buy stop order. So you can just click this one. Okay, it's not triggered because the market is already moving toward that point. So let's change the order a little bit. So let's go to the order one more time, not market execution, but the pending order. Which one? Buy stop. So at what point? Let's say at this point, this point, 1.23563. 1.23563, and just place the order, and you have this buy stop. Okay, so this is your buy stop, and this is your buy limit. Buy stop and buy limit. Do you want to put the SL and TP for this one? Yes, of course. So how do you put the SL and TP? Just double click on the green line and it will show you where to put your SL and TP. Just determine which level you want to put your SL and TP at. So you want to put your SL over here, for example. What's the level? What's the price level? 1.23504. So 1.23504. This is the level for SL. And how about TP? So TP, let's say this level, 1.23707. So 1.23707. This is where you put your TP. So now you can see we have made all the trades. I mean, not the real trades, but the buy stop and buy limit trades. When the market reaches these levels, the trade will be executed automatically. Okay, so Khanji is asking what's the difference between the two. That's a very important and very interesting question. Thank you, Khanji, for your question. Okay, so let's say the market is over here. Okay, now if you want to make a buy trade, remember, if you want to make a buy trade above the market, if you want to make a buy trade above the market, or you want to make a buy trade below the market, these will require you to have different orders. So how do you put the trade above the market? You will go to buy stop. Okay, and if you want to put trade below the market, you want to buy below the market, then you go for buy limit. That's it, very simple. Buy limit and buy stop. So this is the difference between buy limit and buy stop. Now how about the sell limit and sell stop? Okay, Deepak Kumar Modi ji is saying, hi sir, I'm late. Okay, yes, Modi ji, you are late, but that's okay, fine. You can watch the webinar one more time again after the end of the webinar, okay? So no problem at all. And how about the sell limit and sell stop? So let's say the market is over here. Now you want to sell when the market is coming down. You want to sell and you want to sell when the market goes up. So how do you do it? You will sell limit above the market, sell limit above the market, and you will set sell stop below the market. Sell stop below the market. Welcome Khanji. I hope you understand the difference between the two, because this difference is very important. So guys, let's go ahead. We have already practiced this thing and I will go ahead. Okay, so to go long means to buy. To go short means to sell. Very simple. Bullish market means the market which is going up, an uptrending market. Bearish market means the downward going market, the market which is going down. Bulls are the people who make buy decisions, those who buy. Bears are the people who are selling the market. The ranging market is when the market is not moving up or down. Trending market is when the market is moving up or down, any direction. Hawkish is when the CBN is in support of raising the interest. So let's say any central bank is in support of raising the interest rate, that is hawkish. And if the central bank is trying to reduce the interest rate, it is trying to cut the interest rate, that is dovish. So dovish and hawkish, these two are the positions of the central banks. There are the nicknames of currencies, very simple. USD is the greenback, GBP is the cabal, NZD, as you know, New Zealand dollar, it's is the kiwi, Aussie dollar means Australian dollar, loonie is the Canadian dollar, and oil is called black gold. So this is just the nicknames, you don't have to remember them. What are the lot sizes? So lot is a unit of Forex market, and remember one standard lot contains how much? 1 लाख करेंसी पेयर्स होते हैं उसके अंदर. One standard lot contains 100,000 units of currency pairs. 1 lakh, 1 lakh currency pairs. A mini lot is the 1/10 of that thing. So just divide by 10 and you will get one mini lot. And if you divide one more time by 10, you get a micro lot. Very, very simple, right? So how to choose your appropriate lot size, that is very important, and it of course depends on your trading account, on the size of your trading account. It depends on the size of your trading account. So if you have a small account, then you should go for smaller lot size, let's say for the micro lot. And if you have a big account, then you should go for standard lots. Okay, Mr. Ayubi is there. Walaikum salam Ayubi ji, thank you for coming. Okay, so now there is an example of 3 traders. They all bought a currency pair with a standard, mini lot and micro lot respectively, with a 20 pip move in the profit. Here are the 3 respective risk reward ratios. So for example, if you made a buy decision of 1 full lot, that means 1 lakh units, 1 lakh British pounds or 1 lakh euros, or if you made a buy trade of 10,000, that means you are buying a mini lot, or if you want to make a buy trade of a micro lot, that will be 1,000 pairs. So what happens when you have bought 1 lot, that will give you a standard that if the market moves 20 pips up, then it will generate you a profit of $200. If you made a trade of 10,000, then it will give you a profit of $20, and so on and so forth. So you can see that whenever you have the market moving in your favor, if you have bought a bigger size, then it will give you more profit. But if you have made a big trade and the market is moving against you, then that will take a lot of money from you. So it will take a bigger loss. Okay, so remember that. Praveen ji is there. Namaskar, Sarji. Okay, namaskar, Praveen ji. Thank you for coming. So let's go ahead. What is the leverage? So a leverage is something which increases your buying power. Leverage gives you an increased level of buying power. So let's say your starting balance is $1,000. Now, if you are making a leverage of 1-to-1, that means it's the same thing. So it will not increase any buying power. So you can only buy the things which are less than $1,000 because your starting balance is $1,000 and you have no leverage. 1-to-1 leverage means no leverage. Now, if your leverage is 1-to-10, that means you can buy or sell anything 10 times more. 10 times more. And if your leverage is 100, then you can buy or sell 100 times more. And in the same way, if you have a leverage of 500 times, then you can buy or sell 500 times more than your account balance. And you can see that when you increase your leverage size, it will also increase or decrease your profits. Okay, so be careful with that. Okay guys, I just want to show you one more time the promo code. If you want to make a deposit, then it will give you the double of that deposit. So let me show you the promo code for a while. For those of you who are joining us just now, please look at the promo code and you can use the promo code. Okay guys, welcome back. So let's go ahead and understand what is the take profit order and what is the stop loss order. Okay, Medi Singh is saying still waiting. Medi Singh ji, I will take your question. I will definitely answer your question. I will definitely answer your question. Okay, so let's go ahead and see what's happening. Okay, so what is a take profit order? A take profit order is where you want to exit the market with a profit. And a stop loss order or SL is the point where you want to exit the market with a loss. So you don't want to take any more loss. You just want to exit the market. That is your stop loss order. Now, why do you need stop loss and TP? Why do you need SL and TP? Well, your most important job as a trader is to manage your capital, to preserve your capital. Because if you do not manage your risk, then the market will take away all the profits from you and more. That's why you need to manage your risk. And how do you manage your risk? You always manage your risk by implementing stop loss orders and take profit orders. And how do you do that? Well, let's go ahead and practice that in our MT4. Now you can see that we have, okay, so I will start from here and I will show you how to put your stop loss or TP. So let's say I want to make a sell trade, okay? Okay, let's first we will make a buy trade. All right, I want to make a buy trade. So what I will do is I will just go to this one and I will write down the lot size. Let's say I want to buy 0.1 lots. What do? I just click the buy button and I have made a buy trade, right? What else do I do? Well, I can now put my SL and TP. So an SL will be done, will be put below the market price when you have made a buy decision, right? When you have made a buy trade, then your SL will be below the market price and your TP will be above the market price, right? So what I want to do is I now want to put the SL and TP. So what I will do is I will just drag and drop this to the downside. Where do I want to put the SL? So I want to put my SL, let us say over here, right? This is where I want to put the SL. Khanji is saying, sir, partial TPI. Yes, MT4, I will do the partial exit. Okay, Khanji, thank you for reminding this. I will take it. Very informative webinar, sir. Explain all types of order. I have already, Yalla ji, I have already explained all types of orders. Please go back and watch the webinar one more time. I have already explained all types of orders: buy limit, buy stop, sell limit, sell stop. I have explained all these four. You can go back and watch. So this is my SL because this is where I have made a buy trade and now I want to put my SL, so I will put the SL over here. Now if I go to 5-minute time frame, you can see, or 15-minute, let's say, you can see that my SL is over here. How do I put my TP? Just drag and drop to the upside. This is where my TP is. So this one is my TP and this one down here is my SL. So SL and TP, you have these two orders, SL and TP. Very simple, guys, isn't it? Very simple. Now this is about the buy trade. But if you want to make a sell trade, what do you do? Well, let's go ahead and now I want to sell, let's say 0.15, and what I will do is I have put the sell order over here. Now I want to move the market to the upside. This line, the green line, just drag and drop to the upside, and this is your SL now, because in sell order your SL will be up. Sir, trailing SL please. Okay, I will discuss the trailing SL as well. Okay, thank you for reminding me, Ms. Raji. And how about your TP? Just drag and drop over here, and this is your TP now. So you have put a sell order and you have made a SL and TP, these two levels. So this is how you make your trade and put your SL and TP. Okay, very simple, guys. And now let's go for the partial exit. Now I want to exit the partial, take a partial exit. How do I take the partial exit? What is the way to take the partial exit? Just go to this one. You can see your profit or loss over here. Double click on this one. And how much? Let's say you want to make, you have sold how much? You have made a sale trade of 0.51 lots and you want to take out some lots out of the market. How do you do it? Just write down the lots. Let's say 0.26 and just place this one and it will close your trade. The partial close will be done. It will take the partial close of your trade. You want to do it again, just go to this point, double click on this one, and how many lots you want to exit. Let's say you want to exit 0.10 and you can just close this. You can see that we have made a small profit and we took it out of the market through the partial exit. Rajesh Sirvi ji is saying thanks for the regular classes, learning a lot from Sir OctaFX. Thank you so much, Rajesh ji. And remember guys, we also have a live trading session every single Wednesday. Every single Wednesday we have a live trading session. Please go and take the live trading sessions, because I discuss a lot of things in the live trading sessions. Okay guys, so let's go ahead. And how about trailing the stop? So I am closing this trade. Now what I want to do is I want to trail the stop loss. So how do I trail the stop loss? Well, first, when the market goes in my favor, then I will double click on this one. Not double click, actually the right click on this one, and you can see that your profit is in what? In deposit currency. Okay, your profit is in deposit currency. Go to points, as points, go to press as points. Now you can see 15 points. There are 15 points, right? 14 points, 13 points. Now what you do is you right click on this one and click on the trailing stop. And how many points behind the market you want to put your trailing stop? Just tell it how many points. Let's say you want to put it 25 points behind the market. So now my trailing stop is at 25 points. Or you want to change the points, go again to this one, right click, click on the trailing stop, go to custom, and you can put how many points, however many points you want. Currently you can see that the trailing stop level is minimally 22. So we can put more than 22 but not less than 22. So let's say 26. Now the trailing stop will be at 26. Now today, unfortunately, the market is not moving much because of the bank holiday. That's why I am unable to show you how to put a proper trailing stop. But you can do this and practice in your account and you will understand how to do it. Okay, so welcome Khanji. So let's go ahead guys and finish our topic. We have done the practice. Now I will go ahead and show you the promo code one more time. Okay, let me show you in a different way. Okay, so I am getting some questions. He is the best teacher, Farhan Nuruddin. Thank you so much. Thank you so much. Thanks, sir. Misra ji is saying, what is the benefit of a subscription of silver account? You can get some benefits which you will see a little bit later. I will answer these questions, but first I want to go ahead and let's see what's happening. Okay guys, so questions and answer, a quick test for you guys, a little bit of test. Can I ask you some questions? One question, what is the opposite of a trending market? Which currency comes first in a currency pair? Okay, so this is a very, very interesting combination of questions. Misra ji wants to have the promo code. Misra ji, you want to have promo code? I can show you one more time. Okay guys, let me show you one more time because Misra ji wants to have one more time. Promo code. Okay, this is the Okay guys, so this is a very simple question. Can I have your answers please? Guys, can I have some answers? Thank you so much. What is the opposite of a trending market? Well, you see, the opposite of a trending market is always what? It is a ranging market. So ranging market is the opposite of trending market. Rajesh Sirvi ji, we will give you the recommendations in our live trading session on Wednesday. Okay, on Wednesday I will give you the live trading recommendations on Wednesday, not today. Which is the opposite of trending market? That's ranging market. Khanji, very right. Base currency, very right. It's Abbas Sons Vlog ji is saying which currency comes first in the currency pair. It is the base currency. That's right, very right. Manoj Patraji, ranging. Yeah, very right. Manoj Patraji, ranging. Okay, question number 2. How many units of a currency can you buy or sell with 3 standard lots? How many units of a currency with 3 standard lots? Guys, 3 lots. 3 standard lots. How many units of currency? Because one standard lot contains how much? I told you earlier. Just multiply it with 3. So how many units of a currency in 3 standard lots? I want to look at the answers, please. Three lakhs, yes, very right. Khanji, right, very right. 3 lakh, yes, 300,000, 3 lakh. Okay, question number 3. What is the trading power of a $6,000 trading account with a leverage of 100? So if you got a leverage of 100, then what will be the trading power, the buying or selling power of your account? Vidyadhar ji is saying 300,000, 3 lakh. Yes, Vidyadhar ji, very right. 3 lakh is the right answer. Thank you. $600,000. Yes, very right. Deepak Kumar ji, Modi ji, very right. 600,000. Because you multiply it with 100 and it will give you $600,000 of buying or selling power. Okay, the last question. Take profit and stop loss order works even if a trader is offline. True or false? 6 lakh, right. Praveen ji, thank you. Right. Okay, question number 4. Take profit and stop loss orders work even if a trader is offline. True or false? Farhana Nuruddin, 300,000 is the answer for first question. Khanji is saying true. Yes, that's right. Guys, when you close your trading platform, when you just close your trading platform, your TP and SL still work. Modi ji is saying right, false. No, Modi ji, it's right. It's true. Misra ji is saying true. Vidyadhar ji is saying true. Yes, that's right. Deepak Kumar Modi, right, true. Okay, thank you so much, everybody. So let's go ahead and now you can ask me your questions. And there was a question from Singh ji, from Singh Saab. There was a question. Medi Singh ji asked me a question. Tell me how to know the trend indicator by trading positional. Okay, so very, very simple indicator. Okay, for those of you who want to know about the buy stop or sell stop, this is the types of orders. Okay, so you can just look at the types of orders. Okay, so how do you know the direction of the market through an indicator? Which indicator, Medi Singh ji, I'm answering to your question. Which indicator to use for direction of the market? Very, very simple answer, Medi Singh ji. You will be surprised to know that the answer is just use an MA or EMA line. Just use moving average. Now you can use moving average or exponential moving average, whatever you like. That's totally fine with me. So I will go to EMA and you can see that you have so many. Just select this one, moving average exponential, very, very simple. And this will give you a line on your chart which will show you the direction of the market. Now you want to know the direction of the market on a higher time frame, just go to 15-minute time frame and check your, on 15-minute time frame, just check your EMA. Just check the EMA where the market is going. It will give you a good idea. For example, you want to know from here where the market is going. It is going down, and from here you can put a sell trade. But to refine your entries, you can go down to lower time frames. Okay, guys, you can ask me questions, any questions you like. What is difference between EMA and SMA? Okay, so Modi ji, there is no need to go into the details of this, but I will give you the details. But let me tell you, these details are not important. I know these details because I am doing PhD in finance. So that's why I know all this stuff. But you don't need to know this. Okay, you just don't need to know this. It's very simple. So difference between SMA and EMA, right? The difference is very simple. And by the way, Modi ji, I have also given a workshop on using the moving averages. I have given a full webinar on which is called LTS, live trading session on moving averages. Okay, and you can go and check the session. But here I will give you a short answer, which is something like this. So you want to check, for example, you want to check the average of 3, 4, 5, 6, 7, 8. Okay, so let's say you want to check the average of these numbers. Then what you will do is just calculate the average. That will be the SMA. So the SMA will be how much? 3, 4, 5, 6, 7, 8. Okay, so let's say 9 also. There is 9 also. So you want to check the moving average of these numbers. How do you calculate? It will be the simple SMA. Okay, so SMA will be, what's the SMA of these numbers? The SMA will be 6. Why? Because you are giving equal weightage to all the numbers. Now, if you want to calculate the EMA, then EMA will give more weightage to the later numbers. So EMA will give more value to these numbers. So that's why the EMA in this case will be 7. Why? Because it is giving more value, more importance to the last numbers. So that's the difference between EMA and SMA. SMA will give equal value to all the numbers, equal weightage to all the numbers. Okay, so I got some more questions. Rajesh ji saying, from 4 days ago I just started real trading and made a profit and with a loss also. Okay, I am so sorry to know that you have also made a loss. Which EMA? Okay, Medi Singh ji is saying which EMA? Medi Singh ji, I will go for 26 EMA. That will be enough. 26 EMA will be enough. Khanji, the issue is not resolved and it might never be resolved. So just don't worry about this. Whenever the issue is resolved, you will see the meeting minutes in FOMC, in FOMC announcement. Yalla ji is saying, sir, which time good for trading in 24 hours? Please explain. I have already explained, Yalla ji. The best time for trading is London session open. Vidyadhar is saying, sir, jo bhi trade ho. Yes, Vidyadhar ji, in any trade you can just use the EMA, which is 26 EMA. Okay, sir, trading journal kaise maintain kare? Okay, Vidyadhar ji, that's a very good question. How to maintain a trading journal? I will actually give you a full LTS, live trading session on this. But for now, how to maintain trading journal, I will give you some simple tips. Okay, so one, write your emotions, just like fear, greed, confidence, etc. Write down these things. Number 2, write why you put the trade that you did. जो भी आपने trade किया, whatever trade you did, why did you make the trade? And number 3, how did you feel after closing the trade? Answer this question in your journal. And number 4, how did the trade get closed? Answer these questions, and that's a very short highlight of your trading journal. A very short highlight. I will give you a lot of details a little bit later, but not now, okay? A little bit later. I mean, in the LTS, we will do a full LTS on that. Okay guys, so that I think is the end of everything. If you have any questions, you can always ask me on Wednesday, and for you I will also share one more time the promo code. You want to make a deposit, go ahead and make the deposit. It will give you double the amount of the deposit. Okay, so I will show you the promo code right now. All right guys, so with this happy note, I will close the webinar over here. I don't find any more questions. See you on the Wednesday, this Wednesday, just 2 days later, which is gonna be what? It is gonna be, I think, 31st May. So thank you so much everybody for joining us in today's webinar. I wish you all the best. Thank you for coming, and I hope you got a lot of ideas. I think you will be able to make good trades in the future as well. Okay, from Nepal, Prabinji, thank you for coming. Deepak Kumar, good night. I am enjoying your time with your webinar. Thank you so much, sir. Arrange one webinar on swing trading. Ya Allah ji, I will take that webinar. I will do it. Okay, I will do it. Okay, so I can see one question from Rajesh ji. How to exactly calculate profit and loss on the basis of number of profitable trades or losses? Okay, I will give you all these calculations when we do a webinar, a full webinar on risk management. Thank you so much, Manoj Patra ji. Thank you so much, Yalla ji. Everybody, thank you for coming, and take care. Goodbye. I will see you later on the Wednesday. Okay, so see you there. Thank you so much. I will share the promo code one more time.